The text messaging part of Grower's Edge is very handy because every day I'll receive a text that shows me where the best local market is.
That's what I like about Grower's Edge too. It gives me the information I want on my smartphone so that if I'm not in the office, I still get the information that I need.
Good afternoon, welcome to GrainTV. It's August 27th, 2013. I'm Logan Burgess. Joining me to my right here is Brock Shimbano to help break down the action here on a Tuesday when we saw the grains trade lower across the board. Jumping into fire tip here to take a look at the closing prices. We see new crop corn down 14 1/4. New crop beans down 19 and a relatively more quiet day in the wheat complex. Chicago wheat off 4, Kansas City wheat down a penny. Now it was down across the board. Certainly looks like a turnaround Tuesday here from what we saw on Monday, but it really didn't start that way. Let's take a look at a 5-minute candlestick chart here of the November soybean contract. You can see here we found some pretty good strength off the open. We were able to rally up and really took a run at those contract highs you were talking about yesterday, Brock. Contract high on November soybeans is 14.09 3/4. High trade here today was 14.09 1/2. Technically, we found a lot of selling around that area, which isn't surprising. But certainly the close here, I thought, had a lot to do with the midday forecast updates that we got. Brock, can you kind of talk about that, how that added to the selling?
You know, I think we did see a lot of technical selling near that contract high. We saw funds jump in and sell about 5,000 contracts today. So I think that really got us started on the selling. Yeah. And then adding to it, we did get that midday forecast that was a little bit wetter going forward. If you take a look at this map here provided by Planalytics, you can see the 6 to 10 day forecast is projecting above normal precipitation for a good part of the Midwest, including some of those areas that are in dire need of it. But if you look at the red area circled here, the area we need to focus on right now and the area that's really got the market excited is a part of southern Iowa, western Iowa, and southern Minnesota that's been pretty drought-stricken over the last couple of weeks or so. You take a look at the precipitation needed to end the drought right now. We're looking at about 2 to 4 inches for this area. So they are pretty dry. It doesn't look like this precipitation is going to hit that area very well. So this could be a minor selling event within a larger rally right now. And if you take a look at where we have come in the last couple of weeks on the vegetation greenness. You can see by this map here provided by Planalytics, you can see we've gotten substantial decreases in greenness across that southern part of Iowa. So this area is really what has got the market excited, especially over the last 10 sessions or so. Yep. And today we did test those contract highs, kind of like what we were saying it was going to be resistance yesterday. But you know, Logan, looking at the action over the last 10 days or so and looking forward at the forecast, do you think we're going to be kind of range bound, or what are your thoughts on where we're going?
You know, it certainly is going to continue to pressure it here to the downside, but fundamentally I think the conditions that you highlighted, Brock, is really what got us here, and I would expect that to support the market here moving forward over the next couple of weeks. Let's take a look, though, technically at a daily chart here on the November contract. And you can see, I think, one area that a lot of people are going to look as an area of support if we do see the market continue to sell lower is right around the 1331 price level. That's the bottom side of this gap here that we left with the start of Sunday's night session. And you can see that was some highs as well. So we'd expect that area to act as support, and I guess that would be a good kind of downside objective right now, in my opinion. But as I said, you know, certainly the condition ratings that we have out from the USDA and the forecast right now isn't really, it's enough to weigh on the market, I guess, but not enough to really pull us out of the situation that has rallied prices to these levels. So I'd expect kind of a range-bound trade until maybe we get a better idea of the crop, and certainly the USDA is going to provide that in the September WASDE report. So I wouldn't expect a huge sell-off from these prices. Certainly, you know, just to reiterate, the conditions of this crop is what has really gotten us here.
That's about all we have for you here today. Tomorrow we do get the the ethanol update. Right. EIA will be providing that. If you have any questions about what we talked about, give us a call, 877-472-4607. As always, you can follow us on Twitter, @GrainTV is where you can find us there, or check us out on Facebook.
Have a good one.